Immutable, IMX, has a lot of potential, lots of hype, and there's a huge amount of speculation about the price all over the interwebs. In today's video, I'm going to be adding fuel to that fire by showing my price prediction for 2025. So this will be my IMX price prediction 2025. And as I get into today's video, if you do find it useful, informative, then do go ahead and smash that like button. If you're new to the channel, subscribe for more insights into everything crypto. Guys, let's waste no more time and let's jump right down into the charts for IMX. So here we have IMX. It's paired up with USDT. We're on the 1-day Binance chart here. Now, the importance of charts is going to be quite apparent here as we kind of scope out where the most amount of data is. So in the Binance data, you can see that we only really have data from January 2022. So we can come into our trading chart here, trading view chart, and we can go ahead and find some other exchanges that might have more data. So I'm going to start things off by taking a look at KuCoin. KuCoin here, as you can kind of see, has a little bit more data going back to November of 2021. Okay, we're going to go over and check if we have 𝗕𝗘𝗪𝗏 has any more than November of 2022, or whether that is going to be our earliest point. It is pretty much the earliest point. So we're going to use 𝗕𝗘𝗪𝗏 for the purpose of today's video, rather than Binance, because we have more data, and data is very important to understanding the future potential when it comes to IMX. Now, in order for us to be predictive over where we think things can be going in the future, we're going to use a couple of different tools. We're going to use the Fibonacci retracement tools. That's this one here. It's built directly into TradingView. I'm going to show you my settings. You can pause the video on, take a look at the numbers that I'm using here for the Fibonacci frequency levels. And of course, I do have my fib levels based on log scale ticked at the bottom because my charts are in logarithmic. If not, then it would look like this, but I do, and it looks better. And it's easier to see what's going on in a logarithmic view than it is to look at it from one that's not in logarithmic. Okay, we'll turn off the fibs or delete the fibs off the chart. The second tool that we're going to use is Elliott Wave. Elliott Wave is an incredibly powerful and predictive tool. It basically allows you to predict the next move based on the buying behaviors and patterns of buyers and sellers. Essentially what I mean is you're tracking people's behavior, and it's herd mentality, and basically based on their behavior you can predict what they're going to do next. Okay, it's really quite a complex subject. I do try to simplify it the best I can in these videos. I did put together a whole course on Elliott Wave. It's down over at 𝗕𝗘𝗪𝗏𝗀𝗏𝑐𝑜m. I do often run 50% discounts, and everything is linked in the description if you're interested in learning and understanding a little bit more about the psychology of how to kind of track people's buying and selling behaviors and what they mean going further forward. Okay, so for today's video, we'll try to keep it nice and brief and to the point, where we are, unfortunately, I can already see that the Elliott Wave structures of the chart are more complex. So we'll jump into what that means in a moment, but I'll try to keep it as simple as I can and go through this in a methodical way. So those are the two tools that we're going to use. And to start with, what we're going to do is we're going to have to see where we started, because there isn't a huge amount of data here. We obviously did have a previous all-time high by the looks of it, at least according to this data right here, coming in on the 26th of November 2021 at $9.50. Since then, there was a pretty significant drop to the downside. That move to the downside comes in at a low down here. I think it's like a 96% drop. I'm just going to do some due diligence though, because we want to see whether this crosses that. So if I snap a line here, we can take a look. That's 37.7. Here on the 30th of December, it was 37.7. Here on the 31st, 37.7. 37.9 and 37.9. So no, double bottom, triple bottom, but not an actual lower low. So yeah, 96.03% move from all-time high to bear market low down in December 2022. Now, what's really interesting is the structures that have appeared since. Okay, so interesting all-time high, interesting kind of moves to the downside, but that's it, right? And we've seen some pretty good growth at the moment. So from our lows down here of December 2022, we can see that we did rally up quite significantly. So from 37.7 up to $1.58.7. It was a 320% move. After that, we saw a bit of a move to the downside, and this will all become very important in a moment. That was a 69% move, and then we had had another fantastic run to the upside, that coming in right into here. And you can see it was a 676% move. That was followed up by another move to the downside most recently, at least at the point of recording today's video, that coming in, if I can snap it to the correct wick, which always is a problem of mine, 75.79%. Okay, so you can see that what's been going on here is you have a pump up, 320, move down, 69.5, pump up, 676, move down, 75.79, and well, we're looking for the next pump to the upside, right? That's 2025, and that's the importance of where I think things are going there. So let's talk about the sentiment and the psychology of what's going on here. So we're going to start by snapping in some Fibonacci retracement tools. Okay, and we're going to just make sure that I get that on the correct wick there. So here you can see that we had a 37.77 low, we had a $1.58.7, and then we had that push to the upside. Now, the push to the upside is going to have to be measured against this first move. If we move this over to here, we can see that we crossed 1.382. We did not cross, that's right, we did not cross the 1.618. Okay, and that's quite an important move in itself. Anything lower than 1.618 is considered not a trend. Anything above 1.618 would be considered a trend, at least according to Elliott wave. Okay, now here we can see a big move to the downside, and we do see overlap, right? We had the swing here, and we have the move to the downside here, and of course those two things are overlapping against each other. So it's important that we understand what that means. It means there's definitely no trend to the upside from an Elliott wave point of view in the concept of a impulsive break. Okay, so from an Elliott wave point of view, a 5-wave move like this is an impulsive. It's an impulsive 5-wave move. But there are other types of 5-wave structures, such as a overlapping wave 1 and wave 4, and a kind of big impulsive move like this. Okay, this is a diagonal pace pattern where wave 4 is allowed to cross wave 1. Okay, but wave 3 is never allowed to be the smallest wave. Okay, there's lots of different types. You've got leading diagonals, ending diagonals, contracting diagonals, expanding diagonals, lots of different types of diagonals. The main point here is that in a case of your leading and ending diagonals, wave 3 still has to hit 1.618. In the case of contracting or expanding diagonals, wave 4 and wave 1 are allowed to intersect, and wave 3 does not have to hit 1.618. It's important because what we see going on is a potential diagonal. And I certainly say use the word potential diagonal because we can go in multiple different ways, but I think a diagonal is what is going on. We already know that wave 3 is bigger than wave 1. Okay, now that means that we can't have a contracting diagonal. Okay, so a contracting diagonal would be a big wave 1, big wave 2, wave 3 that's not bigger than wave 1, wave 4, and then a tiny wave 5. Okay, and you can argue that wave 4 and wave 1 intersect. Essentially, the rules for something like this kind of contracting diagonal, I'll draw in some trend lines to show you what that looks like in a little bit easier kind of way of looking at it. So draw it in like so. Okay, a contracting diagonal like this, you would have your wave 1 being the biggest possible wave. Okay, you'd have a wave 3 that's not allowed to be the smallest wave, and wave 5 would be the smallest wave. Okay, wave 4 is allowed to cross wave 1, but cannot cross lower than the depth of wave 2. Okay, so you kind of see it's quite straightforward and quite simple when you kind of understand the rules behind it. So with all that being said, we're not in this pattern, and we're not in this pattern because wave 3 is bigger than wave 1. Okay, so knowing that it's not a contracting, the only diagonal that now fits would be the expanding, and the expanding diagonal is exactly the same as your contracting, only expands out, right? So wave 1 is the smallest wave, wave 2 is deep, wave 3 is not the smallest wave, wave 4 usually intersects wave 1, and wave 5 is the biggest wave. Okay, I've drawn it really badly, but let me see if I can correct my drawing. Capabilities here are really bad, but you kind of see what's going on. I'll draw it in like so. Okay, so you have this expanding diagonal pattern going on. Okay, and that is one of the scenarios that could potentially be playing out here with IMX. Okay, so this isn't an education video of like how to do Elliott wave and all that kind of stuff. You can check the course out, but it just gives you some context as to why I think the things I think in here. So we are looking at this through that lens. I'm going to draw some trend lines in. of expanding. Okay, so we see the expansion going on with the price action. Okay, and we can see it kind of doing something to this effect. Okay, so you can draw in the trend lines. Now, what does this mean for 2025? Well, it means that we can be predictive over where it's going to go, right? Because if we are doing an expanding diagonal, it's actually super bullish for multiple years down the line. But obviously for 2025, it means that we might not get necessarily the best possible outcome, but still a pretty lucrative one nonetheless. Now, our fifth wave movement would be our kind of, big kind of hurrah for 2025. Now, what we would ideally like to do is actually go down deeper. If we can go down towards our trend line even deeper into this wave 4, it would push our potential even higher. Okay, but if we currently take our existing swing low, which was the 5th of August, and our swing high, our current swing high at $3.76, then we can look for a targeted move out towards this slightly higher range in 2025, $5.25.4 to $9.0.304. $9.034, I should say. Okay, and that there would basically mark the completion of our structure. As you can kind of see, that coincides with our trend line here, and I'll draw in the waves so you guys can see. You have a wave 1, a wave 2, a wave 3, a wave 4, and a final fifth wave. That fifth wave has to be the biggest wave. So again, we can measure using our Fibonacci retracement tool, the wave 3, which is currently our biggest move. And so the minimum expectation would be the slightly higher range, coming in at $7.11.5. But that's the minimum expectation that you would have based on the existing low. If we come down lower, obviously our low is our target range from the minimum expectations. So you can kind of see here. Now, obviously things can change and patterns can form differently and all that kind of stuff. But for the most part, as you can kind of see, we're going to be looking for potentially no new all-time high and coming in just a little bit short on this diagonal based pattern. Now, it's possible that maybe our bullish market gets a big reset at some point, like we saw around kind of March, April of 2021. If we can see a big reset here, it's possible that we get another rally, and that rally really kind of takes us up higher. But that's outside of the scope of the data that we see today. From today's data, we have the potential formation. And the reason, guys, I should note that we have some kind of bullishness here is that we have a 5-wave pattern contained in each of these areas. Okay, so you can see 1, 2, 3, 4, and 5, right? So you can see inside here, guys, that we have a 5, 3, 5. Now, it's possible that's a zigzag, but a zigzag pattern doesn't cross higher than 1.236. So this actually has to form something else. We went higher than 1.382. If you remember, you can rewind the video and check it. But you can see that we crossed higher than 1.382. Crossing higher than 1.382 means that we haven't yet finished a push to the upside. So we tapped into those higher ranges, but we never completed those moves. So 2025 to me is looking likely to see a 5-wave move. That 5-wave move can be, of course, more diagonals. It could be, your ending diagonals. We may even see a 5-wave impulsive move that contains a diagonal at the front, right? There's lots of different things that can go on because this 5th wave movement is going to be bigger than your usual kind of expectations. The other way of looking at this is that maybe, the data is just not quite what it used to be. And maybe because there's not enough liquidity in the market for IMX, that maybe it's gone higher than the 1.236 through, irregular means, in which case we could look at it from a zigzag pattern overall, and we would still look for $9 to $15. Okay, so there's a few different ways of looking at it, but for the most part, I think the range that I would be looking would be between $5 and $9, with $7 being the most probable scenario. And if we kind of see a break above these kind of typical ranges, then we might tap into new all-time highs up towards $15 maximum in my mind. So IMX, it's got some potential there. From percentage points of view, from today's current price at the point of recording, we'll be looking at 280 upwards towards kind of 550, maybe getting a maximum of 1,000%. Okay, now if we take it from our bear market low point, if you were accumulating during these lows, then of course we would be looking for, and I'm going to see if I can snap into one of these wicks right here, zoom back out. We would be looking for minimum expectations of around 1,300%, upwards towards 2,200%, with maximum returns around 4,000%. So there's definitely some potential here for IMX. It's looking pretty good if you're looking for speculative investment and all that kind of stuff. But of course, remember, I am no financial advisor. I can't give you financial advice. All I can do do is share my thoughts and opinions on the data in the charts as I personally see it. You guys can let me know what you think though down in the comments below, or join us in our free Discord server linked in the description. If you found this video helpful, then go ahead and smash that like button. If you're new to the channel, subscribe, and don't forget to check out this video right here. It's not one that you're going to want to miss.